Should you automate your trading? Hi, it's Charlie giving you today's video. Well, there's two sides to the argument of automating your trading. So what I'm going to do is I'm going to talk about the positives of automation, and then I'll talk about the negatives as well. Now we have access within my trading community to trading automatic auto trading software, which I've got strategies plugged into, and we've got others as well. So I do have some experience with automated trading from automated trading, generally speaking. So what are the pluses to automated trading? Well, firstly, actually, let's go and have a look at some automated trading systems that we have. And so I'm going to start off with not that one. I'm going to see if I can bring this one up. Okay, so this is one of a bot that or one of the strategies that that I've plugged into our software. These are just a few of the most recent trade signals that it's had live in the software, and it's up about 14% over this past year. Okay, and that's just an index-based strategy, just swing trading indices. Then we've got, so that's up about 14% overall. This one is just a snapshot of a load of different strategies that are plugged in to the same software, which are much more aggressive, as you can see from the returns here. I hope if I bring this column, if I just drag this down slightly, there we go. So closed signals, there you go. So we can now see, okay, so the top strategy plugged in here has done 335, 500, nigh on 600% return this year with a max drawdown of 30%, etc., etc. And these are all stellar returns over the course of this year, but there's also some pretty meaty drawdowns. Look, 60% on that one there. Relative to the returns, the rest of them aren't too bad. But anyway, that's automated trading, and that's the thing with automated trading. The benefits are that you can have something trading away where you're not necessarily having to be there. It's trading, it's taking trades whilst you're at work, whatever. And so of course that's the benefit to automated trading. The returns can be steady, like I've already shown on that index trading strategy, which is programmed to not try and make huge amounts in percentage returns. These ones are, and they're programmed differently. They're a lot more volatile, and therefore drawdowns will be a lot higher. So much more speculative. So you can, when you're programming stuff for automated trading, the scope to be able to gear them or have them trading more aggressively or less aggressively is down to the individual. So there are plenty of advantages there. So what about the disadvantages? Well, the disadvantages, I would say, are one is when you go into a drawdown, at what point do you say, okay, I have to turn it off? Now we have what's the words, things to use in order to to profile a given strategy and know at what point, okay, it's probably worth turning off now. But you never know 100%, but nevertheless you can, you have to know, okay, at what point would I turn a given automated trading algorithm, what point would I turn it off if it had a, like I just showed there, a 60% drawdown? Are you going to be happy with a 60% drawdown? Now there are different ways of dealing with that. You can asset allocate, so you might have a bot like that. Let me get rid of this and bring back here. I think this is the same thing again. So you might have a bot like, where was it? This one here, with a 60% that has a 60% drawdown, but it's up 200 odd percent this year, you asset allocate. So you might have that bot, but then you might have some other bots running as well, so that you only have a given amount of capital allocated to each bot, so to speak. So for argument's sake, you have 500 allocated to that one, and then separately you have 500 allocated to another one over here, let's say, and so on and so forth, and 500 up here maybe to this one, oops, up here. So it's that sort of thing. So you can do that with these very aggressive bots. So you can do that. But still, there's certainly a risk with automated trading that about turning it off. When you're manually trading, you can just elect not to take a trade, or just to not trade for a week or two or whatever if you wanted to. Now with automated trading, of course you can turn them off at a given point. But of course, the risk is you turn it off just when it's about to go and turn a profit. So the point is, with automated trading, is there are advantages in that it's just going to trade. You don't have to be there. You're not having to make the decisions. The disadvantages are you're still, if it goes into drawdown, at what point do you substitute it, put it onto the substitutes bench, so to speak, turn it off, introduce a new automated system? So there's still work to be done. You do still have to retrain your algorithms, so there is still some work to be done, but on a day-by-day basis. Like manual trading, it's a little bit different. So what's the conclusion here? Well, I think at its heart it comes down to what you want from your trading. A lot of people that get into trading, it's all about the money. And of course, ultimately, for all of us, trading is about the money. But what I mean by that is not everybody gets into trading because they're passionate about trading. I'm passionate about the art of trading. So personally, I prefer manual trading, even though I'm not going to do 500 odd percent in a course of a year like that system has. But it's unlikely that system would do that every year, by the way. But that's just not going to happen. So, but I like the art of the analysis, putting the trades on, the targets, the stops, all of the stuff that goes on, the decision making that goes on. I love that at its heart. I love the analysis and manual trading of the markets. So for someone like me, automated trading just takes away the very essence of what I love about trading. But for other traders out there, they'll say, yeah, Charlie, I'm not that much into the deepness of the art of trading, so to speak. I just want to make money, and I'm time poor. I haven't got that much time or inclination. I'm not bothered about what you're saying, Charlie, about, for me, it's like a challenge of trying to work out a jigsaw puzzle. But for other people, they're not. And they'll say, well, actually, I just do some back testing, and then I just want some system to trade my back testing, and away we go, sort of thing. In which case, then automation may well be right for you. But what I'm trying to say is, although automation looks great, it's still not going to be for everybody, because for a lot of people like myself, I'm like, well, no, I like doing it all myself. I like putting the trades on. I love I was going to say the buzz then, but I love the challenge of trading, working it all out, the analysis, and working out, trying to work out 3-4 steps ahead of where the market currently is, and all of that stuff. Whereas for other people that say, no, I'm not interested in that. I just want something that can just trade away for me, that I have to monitor, and I'll manage it every week, but I'm not having to otherwise get so involved. So it depends on what you want. The downsides to automation, I believe, are the drawdowns. The it's like sticking with a strategy. So when a strategy's equity curve is doing this, it's fine. But when the strategy goes for a longer drawdown, at what point do you have to stop trading it? And so it's just like that, really. Generally speaking, what you do is you look at the historical data, and if it's coming well outside the confines of its historical drawdowns. So if its historical drawdown was, I just picked one there and it was at what, 30%. So let's say its historical drawdown was actually 40%, then we know that it's had that drawdown, and when it was at 30%, it was within the bound, in the confines of its historicals. So, and you can use that historical and then add a bit on top, because the future's never the same as the past and all that sort of stuff. So that can give you a guide. But nevertheless, it's still tough when you're using a systemized approach and it just goes for a long, prolonged flat period. It's still, what I'm trying to say, there's still downsides to automation, because people just assume that automation is, oh, surely that must be better. Well, you're not getting emotional because you're not trading. Well, you're still going to get emotional because you're going to be thinking, oh, should I turn it off? So there's still a downside to it. Nevertheless, there is a place for it, of course, and so depending on the trader. So there you go. They're some of my thoughts on it. Yes, we do actually have automated software, because there are people within my community who like using that software, even if it's just for sending them alerts, and then they go and for backtesting as well, and then they can use it as a backtesting tool and then set up alerts and things like that. But also for auto trading as well, for people that want that sort of stuff. For me, less so. I think it's always interesting and fascinating seeing how they get on, how the systems get on. But at my core now, I'm been doing this 27 years, and I still like the mental game of chess that I have to play every week. So what's yours? What do you prefer? Well, there's some thoughts for you this week.